Hello again, everyone. We had a bit of an absence last week, so sorry about that. We are back firmly in the driving seat again. One of the reasons, actually, that I couldn't do it last week is because I was part of an organising committee to organise a rugby festival at our local club where I'm a coach for 1,400 kids. So that was very exciting. Actually, it worked out well, and even the weather behaved. So thankfully, that went well. And we're going to do it again in March. So we'll see what happens.
Really? Are you?
Yeah.
Did your team win?
Well, they did okay. To be honest, I was actually going round and organising all the different teams and making sure they were there and that everything was going all right. So I didn't really see that much of my own team, unfortunately, but they did well anyway. So, right. Anyway. Right. So, what a week. What a week. I mean, I would say what a month. I mean, we have had so much going on this month. We've had we've had the death of the Queen. We've had the death of the Queen, funeral of the Queen. We've had a new Prime Minister. We've had an absolute nightmare in terms of markets. So yeah, I mean, it's been anything but uneventful. So anyway, so today what we're going to try to talk about is a few of the things from this week. Can't talk about everything because this podcast would last about 24 hours at least, if that were the case. So anyway, we're going to talk about three things today. Firstly, the Bank of England. Why did it intervene this week, and how did it do that? Secondly, was the Porsche IPO a success? And thirdly, what should the UK government do now? So anyway, we're going to be talking about these things, and I'll just warn you in advance that I would say that Ralph is not sitting on the fence. Okay, so just to make sure that. Anyway, right. So Ralph, this week we saw the Bank of England dramatically rolling its sleeves up, getting involved in the market. Why did it do that, and what was it trying to achieve?
Well, what it actually do is, first of all, to establish the baseline here, guys, what it do is, or what we refer to, is that it went into the bond markets to shore up bond prices. The reason that it had to do this, or felt it had to do this, was that bond prices were in free fall, and it felt the need to stabilize these. And this has all got to do with inflation and interest rates and the cost of borrowing, and I'm going to get to that. But of course, well, we've all seen the news, but just to make sure that we're all on the same page, I'm going to repeat the obvious. We have a new Prime Minister, and we, I think, all heard what she kept saying in the hustings. She said, I'm going to be a true conservative prime minister, and I'm going to be true to the conservative spirit, and I'm going to reduce interest rates. Not interest rates. I'm going to reduce taxes. And we're all getting a little bit worried at that stage, I believe. But then when she actually did become prime minister, I don't think anybody, certainly not me, would have expected the absolute nuclear recklessness with which this government is clearly aiming to reduce the UK economy to the state of a newly emerging country. And that will happen fairly soon, and this also is tied in with what the Bank of England tries to do. So clearly we know that this government is clearly emerging as a very radical government in terms of tax cuts, but it is not just that, it is also the way in which the tax cuts are being delivered, or rather which target groups are in focus here. Because I was actually saying that to a different friend, Peter, not you. But
what? You got another friend? What's going on? Anyway,
sorry, not really. Met him on the internet.
Oh, yeah, one of them, right? Yeah,
excellent. Oh dear. And so I was saying if I had to write something for Spitting Image, like a farcical rendition of satire of what a Tory government might do, I would say something like, "Oh, they're going to make the bankers richer. They're going to slash taxes and basically, make the rich richer, and in particular the bankers." And then we all laugh, embarrassed. Yeah, haha, cool. Like that is going to happen, and. Yeah, it did. It exactly is in line with what you would classify as a farcical satirization of what a cliche Tory government would do, and this is what happened. Now, the issue here, of course, is in terms of social equality, that they indeed decided to make the bankers even richer, because um, the tax decreases are not falling equally here. We saw that the 45% top tax bracket is being abolished, and that means everybody who owns anything above £150,000 is basically going to be 5 percentage points richer on all that money and all the excess. And so just to run some figures by you, I sort of did a few calcs before the show, and these are all estimates. I apologize, but I'm guessing that if you're like on £20,000 a year, the tax cuts are going to deliver something of the order of magnitude of 200 quid a year to you. 200. If you're on 30,000, maybe it's 400-500, and if you're on 200,000, it's going to be £5,000. And of course, this sounds bad enough, but if you then sort of think about this in terms of what the net income is and even the disposable income, I'm sort of guessing if you're on £20,000, you have very little disposable income indeed. But if you are a banker on £200,000 plus, you might actually have £30,000 disposable income a year, which is pocket money. This is sort of money after all expenses have been met. And I'm pursuing a point here because the government's justification for this is, of course, the adherence to the theory, which I would actually call is a figment of theory, a figment of the imagination, the theory of trickle economics. Which means that if you make the rich richer, then they go out into the market more and they buy more, and that is going to shore up jobs, and the benefits are sort of trickling down from up high. And I think that's basically a myth. There have been lots and lots of studies being done in economics who have, well, you can't ever disprove anything in economics, but who have gathered evidence that that dynamic is, if at all in existence, very weak indeed. And so I think these numbers put some credibility to the theory that this doesn't happen. If I'm at the end of the day, at the end of the year, have £30,000 left over, which I wasn't able to spend despite my best efforts, well, £5,000 more is not going to make me all that much more confident. So I'm not going to go off after this tax reduction to Harrods and buy whatever I might wish to buy at Harrods, helicopter fuel in a Swarovski crystal encrusted tin or something. If I wish to buy this item, I would buy this anyway. So that's sort of my feel, that the entire economic justification and point of this tax reform is not going to be delivered. The government thinks this is going to be paying for itself in terms of stimulation of growth, and therefore commensurately an increase in tax absolute income, albeit on lower tax rates. But this is, I don't think, going to happen, because a lot of this is eaten up immediately by higher mortgage costs in response to higher interest rates. And now I am finally getting to the response to your question. What has the Bank of England done and why? Because all of this has led immediately to a very swift response from the financial markets, because the financial markets are, of course, in the know. It's sort of like a giant figuring out machine. If you think about the financial markets, all the actors in it, they constantly think about the response to policies and events. This event has immediately triggered the pound to depreciate very materially against all currencies, in particular against the dollar. And the reason why that happened is because people were immediately thinking, oh, this is going to increase inflation. Because despite what I just said, there's going to be, of course, a net stimulus, a net demand, but there is no supply. There's no increased supply. So if people go out into the economy and they buy just a little bit more and there's no supply, that is going to crank up inflation at a time where we're having the worst cost of living crisis anyway. So in response to this, the markets were selling off the pound. And that's a self-fulfilling prophecy to some extent, because as the pound depreciates against other currencies, the cost of imports is rising. And the cost of imports is, of course, going to be an expense to the corporate sector, which is going to be passed on to the consumer by way of higher prices. There is our inflation spiral. Why is this particularly important for the UK rather than for other economies, let's say Germany, if it was in the same boat, which it isn't? Because the UK economy is a net importing economy. We import more than we export, and therefore a depreciation of our currency against other currency is going to net increase the cost of goods imported, and therefore commensurately inflation. And what that also means, of course, is as inflation is expected to rise even from current levels, the only feasible response to that, unfortunately, is to increase interest rates. And that is, again, going to induce negative consequences. The bond markets were feeling these consequences as people were selling out of bonds. And this is a bit like a seesaw. If you sell a bond, the price falls and the yield on the bond goes up. And the yield of the 10-year government bond in the end is going to be the cost of borrowing to the government. And this is now how it all sort of is beginning to look like a package. I mean, if we need to increase borrowing anyway, following this particular, in my view, ill-advised, even reckless policy decision, the amount of required borrowing is going to go up very steeply indeed at a time that the cost of this borrowing is also going to go up. And that is why the Bank of England went into the market buying bonds in order to increase demand for the bonds, which would increase the price and lower the yield, and commensurately, therefore, the future expectation of what government borrowing, of the cost of borrowing. That's basically, unfortunately, not in a nutshell. It wasn't a short response, but that's sort of where we are, and that sort of is the framework of why the Bank of England did what it did.
I mean, it was pretty dramatic stuff, though, wasn't it? Really, because I think that at the beginning of the week, it didn't look like they were going to, or they kind of said, you know, it seemed, I got the feeling that they were saying that, well, we'll just see how it goes. But then the day after, they just waded in. So, so yes, I mean, yes, obviously very dramatic. I'm trying to think, can I think of a time when I've seen that before? I mean, have you seen it before?
I haven't seen it before. I know from history that the 70s in the UK were very poor, very bad times indeed, with very high inflation and a sort of parallel development of the economy of where we are now headed. But I have certainly not seen it in my lifetime in the UK. I came to the UK about 30 years ago, so in 30 years I haven't seen anything remotely comparable.
Yeah, I mean, I can't think. I've never seen this before. But anyway, right. So yeah, okay. So that is all very interesting. And we'll talk a bit more about that and the effects, a bit later on when we talk about what should the government do, what should the government do now. So we'll move on to the second thing, which is Porsche. So Porsche did an IPO this week. So VW owns Porsche, and what it decided to do is it decided to float 12.5% of the company. It was the second biggest IPO in Germany, and it's the only one that's been bigger has been Deutsche Post DHL, which was floated in 2000 apparently. So yeah, so I was just around at that point. So this is very impressive. I remember initially that the deal was they were looking for a valuation of 85 billion euros. In the end, they went for a range of 70 to 75 billion euros, and when it actually went to market, it was at the top end of that range. It went to 75 billion euros in terms of the implied valuation. I think that the initial performance wasn't massively impressive. I mean, it went up a few percent in and what was otherwise a falling market. So there is that to be said for it. But it didn't do particularly well. But having said that, I think that VW and Porsche will probably be very, very happy with that, because I feel that with IPOs generally, it's a very difficult balancing act, because as a company and probably as an investment bank, what you don't want is to float and then the company goes up by 100% on the first day, right? Because although everyone feels good, the company will think, well, what the hell was going on there? I mean, we should have gone for a higher valuation, because this is our time to get the money. And then after that, it's gone, as in we can't get it back again. So they would be annoyed, and the investment bank would probably be annoyed, because they get paid on a percentage, or often they get paid on a percentage basis. So, but they don't want to do that. But then they don't want it to go down. They don't want it to do like, say, Deliveroo did, on its debut. Because although, as I have argued that I think in private, they probably would have been going, ha ha, this is great, everyone else has been a real sucker. But in private, but outwardly they'll be, oh, this is so terrible, and oh no, we think that this is the market's pricing it all wrong. You don't want that either, because the problem with that is that annoys the investors, and it makes them less likely when another IPO comes to market. They'll say, well, what's the point? I'll just wait for a few weeks and it's going to go down 10, 20% anyway. So might as well buy it then in the market. I can buy what I want, where I want, at a price I want, and I'm still going to get pretty much the same, better. I'm going to do better. So, when that's so, there is a delicate balance to be had. And in a way, because it went up by, I mean, it depends what you read. It looked like, one report I said 2%, and another one said 5%, and then it finished down 10% or so. So I don't know. But it sounds to me like it was relatively, just nothing amazing. And like I say, I would have thought that VW, as the parent company, and no doubt the advisors, will have been quite okay with that. But whether or not it's good enough, we don't know, because you can't judge an IPO by its first day or first few days. The other thing, actually, as a more general point, I don't know about this one, is that when you are, one of the benefits of floating, in the traditional way, rather than not involving advisors and things like that, is that you have these underwriters involved, and they stabilize the price. If the price, they see the price going down too much, they'll buy, and then that will stop the price from going down, and it looks to the rest of the market that it's bottoming out and everything's fine. So they start buying it. Or that's the theory anyway. So I don't know what happened in this case, but I mean, we won't really see as to whether this has been a true success or not, for another month or two. I wouldn't have thought. But it's interesting. It wasn't bad, so I think that's a positive. And I think that they probably will see more value I think investors tend to like things that are a simple story. I mean, Porsche targets a certain demographic who has a certain amount of money, and you would argue that this demographic is suffering less than most other demographics. So in that case, you are sort of recession proof in a way. It's maybe Porsche, it could arguably be more recession proof than, say, the rest of VW. But what do you think?
Well, I mean, maybe starting with your last comment, I think that's right. I mean, basically, all the previously stupendously rich bankers who, after Liz Truss's ill-advised plan, are now obscenely rich, they're going to buy all the Porsches. Now, let me switch to serious mode. I mean, basically, IPOs are, I believe, done largely for two big reasons. For one of two or both of these reasons. One is a simple reason, just to actually get some cash in the door, and either use that cash for an acquisition or for research and development, etc. And another one, and this is, I think, the more important one, is to unlock. The word unlock is always used in this context, to unlock value. So what people mean by that is that if management looks at, if VW management looks at their operations and they look at Porsche and they think, actually, we think that in our market cap, which in VW's case is something like 75 billion, our market cap should be higher. It doesn't reflect the economic prosperity and the potential, the earnings potential of our business Porsche. Now, you can't really do this by persuading investors that Porsche should be worth more within VW easily. So what you can do then is to actually quote that part of the business itself on the markets and allow the markets to speak. So in other words, now the markets have an ability to buy into that specific business, and the hope is that you're selling. In this case, I think they sold 12.5%. So the hope is that you're selling 12.5% of your earnings. Of course, this is what happens. But you're hoping that the technical point, the price earnings multiple on the residual is going to be a lot higher. So in other words, you're hoping that the market value of the newly floated business Porsche, of which of course you still own a large majority, is going to increase and therefore outweigh the multiple of the earnings you sold. And that's sort of this unlocking of value which people talk about. And I think this is basically what VW had in mind here. And looking at the way in which the IPO transpired, I would also say in markets such as these, it wasn't so bad. I mean, it wasn't a fantastic success, I wouldn't think, but it wasn't so bad. I mean, they 75 billion market cap, they sold 12.5%, so that's about 9 billion in cash through the door. The market cap is still about 75 billion, and so nothing much has happened there. To your point, whether we would see whether the IPO was a success or not, some time has to pass for that. Yes, I completely agree, both in terms of share price development, but also in terms of we will have to see what VW does with that 9 billion euros, which they received. Because obviously for now, this is just cash, and you can't put a multiple on cash. It depends. What they need to do with that 9 billion is they need to convert it into earnings.
Yeah.
Because that will create a multiple. Yeah. And currently this is just cash. So they can buy something, and I think you would believe that they are going to use it to research and development and to invest it into the business of electric vehicles, which is of course up and coming. And if they do this right, I think it might well be a good story.
I think so. I mean, it's interesting. I like analogies. So if this IPO was on the Autobahn,
Oh God.
the Porsche was in the slow lane, but nevertheless going forward, and it didn't have its foot on the throttle, and with no speed limits. Do you think that's a good analogy? No, probably not.
Very good. I wasn't listening when you,
No, okay, no, okay, fair enough.
you lost me after Autobahn.
Yeah, okay, yeah, sorry about that. Yeah, so I've just heard we've got a bit more freedom time wise, which is great because we're going to be talking about the last. The last thing in a minute. But anyway, I do think this is quite interesting. I do think the Porsche, it went okay, and it wasn't a disaster, so that was good. So yeah, we'll see what happens. Is it going to do a Ferrari? Don't know, too early, but I guess it's got a reasonable chance given that it's it is exposed to a certain demographic that in theory should be okay, and isn't going to be losing too much money. So that's one of those things.
Yeah.
So anyway, let's go on to the last thing, which is I think probably the biggest thing actually, and this is what should the government do now? Now I have to say, before we did this, we always have a little chat right beforehand, and I think it'd be fair to say that Ralph was fairly forthright, shall we say, on the current situation, and I think this is going to make for great TV or whatever this is. This is going to make for great viewing. So anyway, what do you think of the government, and what do you think they should do now, Ralph?
Right. Okay. I think the government
from
should.
a policy perspective, rather than jumping off anything, for instance.
Oh no, I would never say things like that.
Okay.
What
good.
I think the government should do is
I'm
they
waiting.
should walk around the United Kingdom and apologize to every citizen and resident in the United Kingdom personally for ruining the economy and ruining the prospects of said citizens.
Have you ever seen? Have you seen Game of Thrones before?
I'm sorry, I'm not in the mood.
Okay, no, because I was going to say in one part of the Game of Thrones.
No, I haven't, by the way.
I've forgotten the name of the character. It was one of the main characters. For punishment, had to walk naked through this village, and everyone was throwing stuff at her, and I don't know. I mean, are you maybe saying that may be an appropriate?
No, this is not appropriate. I wouldn't wish that on my worst enemy.
Okay, no, fair enough. Yeah.
But no, I think an apology to everybody would be well received. I'm waiting. Okay. But tongue out of my cheek, perhaps, and off the soapbox now a little bit. Soapbox is free. You can have it in a sec. No, look, what should the government do now?
I need it. I'm too short. But anyway.
I think, some of the evidence of the response is quite interesting here. The IMF has wrapped us across the knuckles for this, and even though the IMF makes all sorts of statements all the time, it is unlikely, it is rare, in fact, sort of unheard of in my recent memory as well, at least, for the IMF to openly criticize the fiscal policy of a government of the G7. And that has happened. Second, the Bank of England clearly is unhappy with this because of the action of the interventive action which we discussed. But most clearly, we see how the financial markets speak. And if you don't believe the IMF and if you don't believe the Bank of England, that's fine. I think you have to believe the reaction of the financial markets. And it is clear that this is an ill-advised policy, which has been recklessly implemented, in my view, without listening to advisors who are economically literate, and perhaps without seeking advice of these advisors. I think the government needs to absolutely and very quickly change their intransigent attitude to advisors, if indeed such attitude exists, which I am pretty sure does, and start listening to people who understand how the economy works, and in particular abandon a philosophical attitude that confuses sticking to conservative ideological dogma with clarity of understanding and moral purpose. Because that is what I think Liz Truss is doing. It is important, I think, for the government, for any government at a time of crisis, to remain flexible and fluidly respond to a dynamic situation. What we're having at the moment is actually objectively a farcical situation, because we have a fiscal policy that is at loggerheads with the monetary policy. And that is in fact also what the IMF said. And that is a situation which I think is objectively something that has to be remedied. So in terms of more specific policy, well, not advice, certainly not from me, but policy, my wish list would be to look at that and make sure that the policies which are being implemented are not in contradiction to one another. What I would wish to see is that the government climbs down from this, reverts some of the policy decisions that are being made, in particular the scrapping of the top rate of tax. What I would have liked to see, and you guys know this, that I was in favor of Rishi Sunak to be Prime Minister. What I would like to see is perhaps a policy that redistributes money. I mean, I'm aware, and we're all aware, that there are no easy solutions to the current crisis. That much is clear. I also believe that the government did well to intervene quickly with an energy plan. I think that was good, although clearly economically it creates a similar sort of situation, a similar problem. But these problems we have to tackle and we can't avoid them. So I would unfortunately be in favor of increasing the top rate of tax, introducing a windfall tax for the oil and energy firms, using that money to redistribute it, although I'm also aware that these things sound very good, but they don't actually generate that much in tax revenue. People always think that taxing the rich, or reducing, in this particular case, the tax rate on the rich is generating or costing the government lots of money. It doesn't really. I think this cost £5 billion. So in the big scheme of things, this is actually not that much. But I believe the philosophy is wrong here. I think we have to take it on the chin and make sure that people who are not bankers on very high salaries are able to get through the winter, and then reduce taxes in line with conservative philosophy. I have nothing against that in the long run, in a sustainable fashion. And so in short, yes, I would hope that the government will be able to learn these lessons before the November budget, and use the November budget as an opportunity to repeal some of the policy decisions which they made. After apologizing to everybody, which is
Well, I don't know, because that might take quite some time, mightn't it?
Do a
Yeah,
conference call.
conference call. Okay, everyone, we're going to do a big Zoom call. Everyone's invited.
No, sorry.
Yeah, yeah. Liz,
Doing
Liz,
like a Uriah Heep routine from Dickens. Sorry,
yeah.
sir.
Liz and Kami Kwasi are going to be on the call, and this is going to be, outlining what's going to happen. Anyway, I think that this is very, yeah. I mean, from what I can see, I mean, I feel that I also think that the energy thing seems to be good. The only thing lacking in that is for businesses where they lack clarity. Because it's only for it's only for a short period of time, and I can see businesses say that's not long enough, but it's the sort of thing that I think they can change as things are going on.
Yes.
And actually, it might mean that companies that are really sort of going to fail anyway, maybe they'll make that decision now, and then it means that there's more money available potentially to really help the businesses that survive. But I don't know. That's a bit of a harsh thing to say, probably. I think the top rate of tax is ridiculous. What they, that they did that. I think, yes. Why, if there's any time that you can get a tax increase through, it's going to be now. To the rich, because they can't be blind to what's going on. And, for something, say like $5,000 to someone who's working, who's earning 200 grand is really not that much.
Exactly.
And so those kinds of things, I think it has been ridiculous. So I don't think everything they've done has been bad, but I think a lot of the things have, there are definitely some major things that they have done wrong. With regard to the bonus, I personally think that's just cosmetic, because that is just an agreement between the banks and the individuals, themselves. That's a pay thing. I don't know. I think these days there's so many compliance people within a bank. It's a lot harder now to do. I mean, I'd like to say this, I'm sure there'll be things going wrong in the future, but, generally speaking, it's generally harder to do anything wrong anyway. So I think that's red herring, and it's one of those things that makes everyone look good and look like they're doing something, but actually it doesn't really mean anything. So yes, but I do think that they need to bring forward any kind of announcements. If they've got that much of a problem, they should say we are going to bring forward the announcement of the budget. If they don't,
we're having the party conference next, and that is going to be in focus, of course. One thing I also want to say, as I said before, I mean, taxing the rich is always a something which appears socially acceptable, but it doesn't generate all that much money. It's still right to do this. It won't solve the issue.
No.
But I think my issue is more than that, is with the wrong message this is sending.
That's right. No, I agree. And
these both of these things, also the removal of the bonus cap and on top of that, the removal of the top rate of tax. I mean, it's just the message this is sending is that the Tory party is out of touch with the reality of the people and is not really caring for the people. And unfortunately, I have to say that as I said before, I mean, the idea of trickle-down economics, I don't think it has all but been discredited.
I mean, I think I can see it working in some ways, I mean, in a limited capacity, like for instance, if more people are getting paid more and they've got more money, you would have thought that, there's more work for nannies and dog walkers and personal trainers. And do you know what I mean? Like businesses that cater to people who are cash rich and time poor, I think there's a certain amount. There must be a certain amount of trickle down from that. But with regard to other things, other bigger things, then not so much.
And also it always depends on context as well.
Mm.
In the economy. I mean, a policy which might work in one particular context may not work in a different one. Trickle-down economics, when it works best when the tide is lifting all the boats.
Yes.
And it is important that the middle income classes, which I'm going to characterize, I'm sure there's a definition which I don't know, but let's say 50,000 to 100,000, that sort of thing. And then again, 30,000 to 50,000. These two brackets. It's important that these people are doing well.
Exactly.
And that because something trickles down from £100,000 salary to a £20,000 salary just as much from, also, and not just from £1 million salary down. So when the tide is lifting all the boats, then this sort of trickle down effect is probably present. But the current idea of trickling down really is targeting the top end of the salary pyramid and hoping that we can sort of grow our way out of trouble. And I just don't think that this is going to happen, because it is precisely the mortgage costs of these middle income brackets which is going to prevent these families to go out into the market and buy things. And let's please also remember, that's actually what we do not want. We do not want people going out into the market and buying lots of stuff at the moment, because that's going to spike inflation again. Which is, it's always easy to criticize. I'm very good at it, but I haven't got the answers. So I realize that there are no easy answers here. If I disagree with anything most in this, it's I'm sorry to say this word, use the word again, reckless implementation of these policies in a non-phased manner. I mean, we could have done this in a phased manner over time, and it would have been far less detrimental than it is turning out to be. Yeah, we wouldn't have anything to say, would we?
And that's exactly, yes. So anyway,
there we are.
Thank you very much, Ralph. I mean, it is very interesting. I mean, we are living through incredible times. Really, I've been saying to people, God, we are all going to bore our grandchildren to senseless with tales of, I remember lockdown, and then, I remember when the Queen died, and I remember that, I remember when Sterling went through the floor, and all this kind of stuff. But I was just on a call, and I said to people on that call, I said, this is the time when actually it's probably quite good to write a diary, because to actually chronicle what is actually going on and how you feel. It's funny here. I got this for those who aren't, sorry if you're listening to this, but I'm holding up. This is my book. This is what I do every day, right? These are all the notes I write every day. And this is an old school diary. But yes, I can look back on this and just think, my God, this is horrendous. It's quite incredible, really. But
of course, grandchildren never listen to their parents, etc. I know this. My parents, of course, had one foot in a much more austere and a horrible time, which is the Second World War. They're not quite old enough for that, but and they were saying things like, "Oh, when we were young, this and that," and I was like, "Oh, God, yeah, rather very interesting, whatever."
No, exactly, yeah. So, but the thing is, though, it's the young kids. That's their job to do that.
Yes.
Whereas it's the old people's job to go, I remember when this happens, right? Brilliant. So they're both doing their jobs. They're both doing their jobs.
I love that. You're right. You're right. Unfortunately, we are now part of the old. Funny that is, and I'm going to be like, I remember when pound was at parity with the dollar. And, oh, come on.
Yeah, but I think that I feel that I am getting old because I'm looking forward to being like that.
Oh, God.
I think that's the thing, isn't it? I think you're younger. When you're younger, I don't want to be like that. I don't want to. I'm not going to be like that. But now I'm actually looking forward to being like that. Just to annoy people.
Remind me, why are you my friend? Why are we mates?
Well, we have
I forgot.
Similar outlook, right?
No,
Similar outlook.
This is terrible.
Anyway, right.
Oh, yes, there's no time. I need to go.
Yeah, exactly. Yeah. Brilliant. Well, look, I'll let you go off to sort out your gold bar collection.
This is actually where all my assets are at the moment.
Yeah, exactly. Yeah. Anyway, but as always, been brilliant fun and a really tough time at the moment. So for the economy. But anyway, have a great day. Have a great day to everyone who's watching this, and back again soon with something special.
Oh, indeed. Absolutely. It's going to be good.
Trying to raise my eyebrows there.
Yes.
Anyway, have a great day. Thanks very much.
Excellent, guys. Thanks for listening. Fantastic.
Bye.